The euro versus US dollar is waffling back and forth. The sterling versus US dollar is lower on the day, while the dollar versus yen is getting a kick to the upside after testing key support yesterday. Those are the three currency pairs I'm going to take a look at in this Kickstart video. Today's date, January 17th, 2024. Let's get started. Yesterday in the euro versus US dollar, we were using the 200-hour moving average as resistance when we came into the new trading day, and the 100-hour moving average as support. We did break above the top side right here during the US session, and then just kind of went sideways in a very narrow trading range for the rest of the trading day. In trading here today in the Asian session, we tried to move to the upside, but then failed. And when we fell back below the 200-hour moving average right here, the sellers turned to buyers. But look what happened at the bottom. We found support once again against the 100-hour moving average. That's 2 times in a row. And this moved to the downside when there was increased momentum. We did break below that level, but that was quickly reversed, as you can see. So there's something going on against the 100-hour moving average, isn't there? Yes, so that's going to be our clue for trading here today. If we do break below that level at 1.0277, that should see more selling pressure and more downside probing with recent lows, including the low for the year and multi years, actually going back to 1.0176 as a target. Maybe not today, but maybe next week. So that 100-hour moving average is going to be a key barometer for us in trading here today. Now on the top side, we have moved back above the 200-hour moving average, and we just tried that here and here, and now here. And the question is, can we stay above the 200-hour moving average in the short term? That would be the best case scenario for the buyers, of course, from a technical perspective. And if it can, then that gives them added confidence to push to the upside. And on the upside, we do have this swing area coming in play between the 1.0332 and 1.0343 level. Level was defined by a number of different swing lows, mainly going back through here, forming this floor and then ceiling right here. We came down to it and here, and then used the level as resistance here. In trading earlier this week, we did break above it, but and we also got above the 38.2% retracement, which is another key target. But like down here, quickly faded and rotated back to the downside. So we had fade to the upside, fade, and when we hit the downside, move back to the upside. So that 38.2% retracement, this swing area, is going to be a key target on the top side for the euro versus US dollar as well. Let's take a look at the dollar versus yen next. And this currency pair has been moving down over the last 2 days, I guess I should say. The first day on Wednesday was a big move. We came down to what was defined as I've now defined as a new swing, or the swing area right through here, the low of it. And we found support buyers. You can see how that came into play right here, and right here. And then we fell below it in trading yesterday. It looked like we were heading down toward the 38.2% retracement, but lo and behold, the price snapped back higher, moved back in the red box, not once, not twice, which is very disappointing when you see that. But then started to move to the downside later in the US session and closed near the lows for the day. In trading here today, we finally reached that 38.2% retracement and this 100 bar moving average on the 4-hour chart, which is now right at the 38.2% retracement level. And what do? We found support buyers. Why? Because risk could be defined and limited against this area. I outlined this level as a key target on the downside, and lo and behold, it did hold support. And then we started this rotation to the upside in the US, or in the trading here today. What is going to be key for today's traders is to stay outside of this red box. If you're a seller, you don't want to see us re-enter that red box. It's just not what you want to see from a technical perspective. So you want to see leaning against this level and a rotation back to the downside, and see what happens at the 38.2% retracement at the 100-bar moving average, or 200-bar moving average on the 4-hour chart. If we get below that level, then it opens the door to the downside. So we've made a run. The sellers are making a play, and now it's time for them to show that they mean business by staying outside that red box. If they can do that, the bias remains more to the downside today and going into next week's trading. Finally, let's take a look at the sterling versus US dollar. And this currency pair has been like a misbehaving child, breaking above and below the 100-hour moving average with not much respect to it. Shame on you. We also moved above and below this swing area right through here with, again, not much respect, although trading yesterday we moved briefly above it and then rotated to the downside, and that led to the move to lower. So the 100-hour moving average, despite its being misbehaving from the market standpoint, still remains a bias defining level. As long as the price remains below 1.2205, I still maintain a shorter term negative bias, plus, longer term, we're negative bias as well. We only corrected over 38.2% retracement. This move right here during this week's trading, that was it. This is the bigger moves to 38.2 way up here. So the sellers remain more in control, and being below the 100-hour moving average keeps that control in their favor. It would take a move back above the 100-hour moving average and above the swing area right here, and then ultimately the 38.2 again of this move to the downside to get the buyers more interested. It would also take the price above the 200-hour moving average, 38.2. Will both come in together at 1.22808. So there you have it. Kickstarting your day for the new for Friday. TGIF to everybody. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.